Commerce is all around us. It's the heartbeat of our world. In simple terms, commerce is the buying and selling of goods and services. It's the exchange of value that takes place in markets, shops, and online platforms. Think about your daily life. When you buy groceries, clothes, or a new phone, you are participating in commerce. Every time you pay for a haircut, a movie ticket, or a bus ride, you're engaging in the flow of commerce. Commerce isn't just about individual transactions. It also encompasses the large-scale activities of businesses. Companies engage in commerce to produce, distribute, and sell their products or services to customers. Whether it's a small shop owner or a multinational corporation, the fundamental principle remains the same: exchanging goods and services for something of value, usually money. Now let's talk about accounting. If commerce is the engine of the business world, accounting is the language it speaks. Accounting is the process of recording, classifying, summarizing, and interpreting financial transactions. In essence, accounting helps us keep track of the financial health of a business. It provides a systematic way to record every dollar earned and every dollar spent. Why is accounting important in commerce? Because it helps businesses make informed decisions. By analyzing financial data, businesses can track their profitability, manage their expenses, and plan for the future. Accounting is like a financial GPS system that guides businesses towards success. It provides the insights needed to navigate the complex world of commerce. At the heart of accounting lies a fundamental principle, the accounting equation. This equation states that a company's assets must always equal the sum of its liabilities and equity. Assets are what a company owns, such as cash, inventory, and equipment. Liabilities are what a company owes to others, such as loans, accounts payable, and salaries payable. Equity represents the owner's stake in the company. Think of it like a seesaw. On one side, we have assets representing what the company owns. On the other side, we have liabilities and equity representing how those assets were financed. The accounting equation ensures that every business transaction is recorded in a balanced manner. This balance is crucial for maintaining accurate financial records. To make sense of all the financial data, accounting relies on a set of key reports called financial statements. These statements provide a snapshot of a company's financial performance and position. The income statement shows a company's revenues and expenses over a period of time, ultimately revealing its net income or loss. The balance sheet, as a snapshot in time, presents a company's assets, liabilities, and equity. It reveals the company's financial position at a specific point in time. The cash flow statement tracks the movement of cash both into and out of a company over a period of time, highlighting its sources and uses of cash. Together, these financial statements paint a comprehensive picture of a company's financial health. They help stakeholders understand how the company is performing and where it stands financially. Section 5. Commerce and accounting, two sides of the same coin. Commerce and accounting are inextricably linked. They are two sides of the same coin, each essential for the smooth functioning of the business world. Commerce provides the raw materials for accounting. Every transaction in commerce, from a simple purchase to a complex business deal, generates financial data that needs to be recorded and analyzed. Accounting, in turn, provides the framework for understanding and managing the financial implications of commerce. It provides the tools and insights needed to make sound business decisions. Without commerce, there would be no financial transactions to record. And without accounting, businesses would be flying blind, unable to track their performance or make informed decisions. Section 6. Making sense of profits and losses. One of the key functions of accounting is to determine a company's profitability. By tracking revenues and expenses, accounting helps us understand whether a business is making or losing money. Profit is the lifeblood of any business. It's the reward for providing goods or services that customers value. Conversely, losses can be a sign that a business is struggling and needs to make adjustments. Accounting provides the framework for calculating and analyzing profits and losses. This information is crucial for business owners and investors alike. It helps them assess the financial health of a business and make informed decisions about its future. Section 7. How accounting helps businesses grow. Accounting isn't just about keeping track of the past, it's also essential for planning for the future. By analyzing financial data, businesses can identify trends, anticipate challenges, and make strategic decisions to foster growth. For example, accounting can help businesses secure loans. Accurate financial records increase the likelihood of loan approvals by demonstrating creditworthiness to lenders. Attract investors. Transparent and well-maintained financial statements build confidence among investors, making them more likely to invest. Manage cash flow. Understanding cash flow patterns enables businesses to optimize their operations, ensuring they have enough cash on hand to meet their obligations. By using accounting as a strategic tool, businesses can gain a competitive edge and position themselves for long-term success. Section 8. Real-world examples. Commerce and accounting in action. Let's bring commerce and accounting to life with a few real-world examples. The local bakery. A bakery owner uses accounting to track the cost of ingredients, set prices for their pastries, and determine their profit margins. The online retailer. An online retailer relies on accounting to manage inventory, process customer orders, and track sales revenue. The tech startup. A tech startup uses accounting to secure funding from investors, manage payroll, and measure its financial performance. These examples demonstrate how commerce and accounting are intertwined in our everyday lives and across various industries. Section 9. In conclusion, the power of understanding commerce and accounting. In the grand tapestry of the business world, commerce and accounting are two threads that are intricately woven together. Commerce provides the dynamic exchange of goods and services, while accounting provides the language and framework for understanding and managing the financial implications of that exchange. By mastering the basics of commerce and accounting, individuals and businesses alike gain valuable insights into the inner workings of the financial world. This knowledge empowers them to make informed decisions, navigate economic landscapes, and ultimately achieve their financial goals.